time to welcome our market master for the day. Dipen Sheth of HDFC Securities joins in. Dipen, hi, good morning. Good to have you in our studios. So, I was just looking at the mail that you sent us. The Modi salute is done. Markets are now consolidating, and governance is different from campaigning and winning elections. Put that in perspective. Is the market rally for now done? And so, should we not expect a pre-budget rally, or we can still have a pre-budget rally?
So, Anuj, it's important that we don't look at things on a week-by-week, day-by-day, or even month-on-month basis, if you will.
But we unfortunately do that.
Yeah, so that's the nature of players in the market, but that unfortunately is not the nature of the market. You will have large resets once in a while when a watershed event like the elections takes place. So the entire noise and bluster and energy leading up to the election was reflected in the volatility in the markets, and then the run-up, and got something like a 20% run-up from where we were over a period of 2-3 months, 4 months or whatever. And I think we'll now consolidate a little bit. We'll look for fresh signals. The excitement of a campaign is far higher in decibel terms, but far lower in real terms versus the actual, so it's a little bit like poetry and prose. So now we're getting into the prose phase of the markets, and I think from here on, government actions, a little bit of global noises also, as we can see, such as those are emanating from Iraq. All these things will now kind of culminate, and there'll be a little bit of a push and a pull once in a while. And but the larger picture, if you ask me what's going to happen over the next 2-3 years, let me go out on a limb and say, and I've said this earlier, we are probably sitting at the cusp of what I would call is a golden decade for Indian markets, based on the fact that we are on the cusp of a golden decade for the Indian economy. Not everything will move in a straight line. So till 1 year ago, we were a sell on rises market, and today we are a buy aggressively on dips market.
Okay, that's quite a strong statement, cusp of a golden decade for Indian equities. So, if this is a multi-year bull run, as 90 out of 100 people believe it is, what is the investor approach right now? Should it be a top-down approach to the market, or is it just a bottom-up stock picking that you should look at?
So the top-down shift or reset partly happened around the elections, and but there is still scope for that. The large caps, the well-run, good management, high-quality businesses, well-positioned for the India story over the next decade, these companies are going to go places even from here. So in banks, you look at an ICICI Bank, an Axis Bank, an IndusInd Bank. Some of the state-run banks are actually very good organizations, and I wouldn't write them off so easily. So despite the PSU reset, we are still gungo on a state bank, for example, a national proxy for anything and everything to do with India and its economy over the next few years. A Hero Moto, a Maruti on the autos side. Not to write off the allegedly secular and less glamorous sectors like IT and pharma. So there are still magnificent stories unfolding at large companies like Lupin and Sun. In ITC and Pidilite. ITC is a little out of fashion, budget's round the corner. Hell, you'll get a chance to buy it. It sounds like a completely unglamorous thing to say, but look at the pricing power, look at the penetration of cigarettes, look at the fact that only 12-13% of all tobacco is consumed as cigarettes. Pidilite, which is actually a proxy for housing construction. Even FMCG offers opportunities. Don't write off IT. We've seen a lovely comeback by Infosys. It's still 14x. So the large companies still offer you top-down opportunities to make money.
Okay, you're saying this is the time to dig out mid-cap multi-baggers. Pidilite could be one, but give us 3-4 names.
So Pidilite is no more a multi-bagger. It's a reasonably large cap by now, yes, but by any, in comparison with ITC, obviously it's a much smaller company. So you will see the multi-baggers and the mid-caps emerging from the sectors which are beaten down. And although everything and anything in mid-caps has run up, in let's say construction and infra, in let's say capital goods, everything's run up. Everything's like 2x from where we last saw it at least, or thereabouts. But still there are lots and lots of high-quality businesses. I was speaking with the management of, let's say, a completely under-owned stock like Titagarh Wagons yesterday. And if you look at what the railways has gone through in terms of underinvestment in the last few years, and the opportunities for building out Titagarh's business over the next few years, if the railways do what is being thought of in popular discourse, This is still a 600, 700 crore market cap company, 650 crores or somewhere. And there's no reason why they can't make something like $1 billion rupees of profits in maybe 2, maybe 3, maybe 4 years from now. So, will it happen? I'm not sure it will. I think we need to dig deeper. So a lot of the mid caps will suddenly run up and you get excited and you buy them in momentum. You can go wrong that way. But if you dig out, and these are companies which we don't even cover, you know, we bumped into KPR Mills some time ago, and the stocks run up some 20-25% from there, and about 40-50% from recent lows. It's still trading at a price to cash profit, cash earnings per share of something like maybe about 3 or 4 for the current year. That's incredible.
Mills.
KPR Mills.
Okay, the last time you had told us about how bullish you are on cement as well, and we've seen a lot of the cement stocks move quite a bit. But you know, tell us, outside the index, outside the frontliners, what are the big cement stocks to bet on now despite the run-up?
So the front lines are, you're right, you know, they're trading at 12-13x EV EBITDA on an F16 basis with rosy assumptions on what kind of EBITDAs per ton they will make in that year. And I think those EBITDAs per ton are also likely. We will see consistent 4-digit EBITDAs per ton playing out for them. But you're right, the front lines don't offer such a huge opportunity unless you believe in a cement super cycle. I wouldn't go out on a limb and buy an Ultratech today. The reset has happened, you know, from 1800 to what, 26, 27 or wherever it is now. But look at the mid caps and look at the aggressively and well-run mid caps there. So you've had a complete reset for the South India players, whether it's even an India Cement, let's say, which suffers from perception problems. A fantastic cost leader like Ramco running up 50-60% over 2 months.
Yes.
You look at a mid cap like Orient Cement, which is sitting on a 5 million ton very efficient capacity and is adding 3 million tons at something like $90 a ton. I think that's an incredible achievement. We arranged meetings for Orient's management recently, and there was very strong investor interest. Despite the run-up, it's almost doubled, I think, over the last year or so. And it's still trading at what about $60 odd or whatever.
Okay, you said PSUs can still be some of the biggest wealth creators, despite the kind of rally that we have seen. For example, BPCL has more than doubled, ONGC rallied 50%, PSU banks doubled, even from here on?
So they've doubled, but you have to recognize that a lot of them had more than halved also.
Yes.
So Bank of Baroda, we've seen it in 4 digits. It's still not back in 4 digits. Yes. We've seen State Bank at what, 3,400 or 3,600 or some such in the last upsurge, and it went down to some 1,100-1,400 from there. So, and where are valuations? For let's say for State Bank, you are still at about 1.4x adjusted for embedded value on F16 basis. For a Bank of Baroda, you would be kissing 1x or some such number. I think when there is macro healing in the economy, and if the NPS cycle were to reverse, I'll never tire of saying this, the depletion to adjusted book value which we saw in the last 2 or 3 years may play exactly in an opposite way, and you will see additions to adjusted book value quarter after quarter. You might see upgrades. Will that happen or not? That's the big thing. So we come back to the issue of, is the Modi government now getting into the prose of governance from the bluster or the poetry of campaigning, and will they deliver? So a lot of these changes will play out slower than you think.
Actually, that's the $1 million question.
So we're all in a hurry, and we all want to make money and double our
money
money every 6 months. But it doesn't happen that way. This is the real world. I mean, and if the campaign era is over, and I will look for incremental signs on a quarterly, monthly, weekly basis from the government.
Anuj was pointing out the PSUs. We have actually a message that's come on our Money Control message board, written to us by Ashish Ahuja. He wants to know what is the upside on ONGC. I guess his question stems from the fact that ONGC has already risen some 50% since the start of the year, but there is the hope that, you know, the subsidy issue, etc., will get clarity with the new government. So what is your review on what the upside could be?
So there are 2 or 3 moving parts at ONGC which play out differently at different points of time, depending on what's happening to oil prices globally, depending on who's in charge in Delhi and what their outlook and what their style of running the government is. So despite all the bad blood that has been created about how the last exiting government messed up with the oil and gas sector, the one outstanding achievement, did it happen by stealth, by accident, by design? We can argue on that. But the one outstanding achievement was the slow ratcheting up of diesel prices, which is now slated to get the diesel under recoveries under terrific control. I mean, at the last calculated number, I think we were around 4 or 5 rupees under recovery. Even on current numbers at $115 oil, I don't think you would be meaningfully above 6 rupees or something. But that's a matter of finer calculation. But if diesel under recoveries were to kind of vanish over a period of time, and yes, it will have cascading impact on inflation and hence an overall macro challenge. But the direction has been set, and the government, the exiting government and the new government have both been very steady about gradually increasing diesel prices. So that just leaves you with kerosene and LPG and a little bit of better management of those subsidies in terms of identifying and targeting those subsidies. So you could bring down the volumes under subsidy coverage, and therefore the entire amount that is going out is under recovery. So and hence the drawdown that you would put on ONGC's upstream profits for participation in the under recovery. So the residual profits to ONGC, the residual incremental profits to ONGC will completely go out of whack. You are still buying ONGC at something like 11x or so on a 16 basis.
But does this whole Brent crude situation, this whole Iraq situation changes things? I mean, we've seen in the past also, I think it was somewhere in the middle of last year when rupee was stable at 55, that diesel under recovery was almost down to nil, and then that surged towards 65 really through calculations haywire. This time around it could be because of Brent. What if Brent goes to 130?
I agree. What if Brent goes through 130? We are in serious trouble if Brent goes to 130. Will it go to 130? I'm not an oil expert. I'm not a geopolitical expert, if you will. I'm no expert. But I'm thinking it's unlikely. I think there's 2 or 3 million barrels of hidden surplus slack capacity in countries like Saudi Arabia, which they will kind of move the right levers at the right time, because at some point it leads to demand destruction for oil. It leads to alternative investments. I mean, investments in alternative energy research and so on. So the Arabs have got, the OPEC countries have got, it's not that they're a bunch of greedy people who are just looking to maximize oil realizations. They understand that at meaningful numbers beyond, let's say, $105, $107, there is a clear question of demand destruction. So I think prices should come back. I hope I'm right, and if I'm wrong, I would agree with you that we could be in serious trouble. That's a structural problem with India. We import some 75% of our fossil fuel requirements, maybe a little more now. So again, I would say it's up to this government, and I'm willing to give them 10 years for it. Unfortunately, they just have a 5-year term, and we might not see all the good news happening by the end of that term. But with 10 years at their disposal, who knows, a few miracles are possible in domestic oil and gas.
Okay, before we take our next money control query, just a word on United Spirits. That's been the stock of the last 3 or 4 days. How are you positioned on that one? There's technical reason, of course, why the stock is seeing a bit of a pressure. But fundamentally, what's the value for this stock?
So United Spirits we don't cover. We don't cover it for the reason that it's got a certain kind of investing arithmetic that is very difficult to grasp, because the opportunity to buy out, let's say, and that's what the new owner is all about. The opportunity to buy out an Indian domestic liquor play is so huge, and with the kind of 100 plus million cases kind of business that they have, anybody would pay a prince's ransom for it, and they've ended up paying a prince's ransom for it. Now will the business scale up and deliver the kind of money that there is to be had in the sector? That's arguable. So any valuation on, it's quoting at something like 50x or some such number on popular estimates. So they had an open offer, and everybody rushed to tender, and hence the acceptance ratio is lower than what the punters would have thought. So it's this kind of thought process that will govern stock movement, and that's exactly what is playing out in the markets right now. It's got nothing to do with the fundamentals. The fundamentals were noticed by whoever was acquiring the company, and that's over. And will those fundamentals actually deliver over the next 2 or 3 years? I don't think they matter. That matters right now as much as this kind of a technical factor, such as what the acceptance ratio might be, and it surprised a lot of people.
All right, so a little bit of a technical worry there. United Spirits still down about 2%, but let's get in one last query that we have on our money control message board. Is it a good idea to buy Tyre stocks? Sachin from Mumbai writes into us. What do you think after the big run-up?
So the Tyre blocks have all doubled and tripled their, they've given 2-3-digit returns for investors, and it was a fantastic call. I must confess, we've kind of been caught napping on that one. to my mind, tyres is not a very high quality business unless you are in a Balkrishna kind of space where you have.
So okay, if you don't buy tyres now because it's already run up,
and the run up has happened because
of in the space, in the auto ancillary space that you would buy.
So in auto anks, I think there's still a lot of good companies that one can look at. So on the amongst the larger ones, there's Motherson and Bosch, which are more than fairly valued, it can be argued, but they're on a roll in senses more than one. There are, on the other end of the spectrum, you have small gems like Suprajit, which have got return ratios up there close to 30 or so, and which are still valued at 10, 11x and so on, with 3-4 years more of clear growth visible out there. So I think it's given the fact that auto itself is going to be on a roll for the next 2 or 3 years, it's not such a bad deal to look at auto anks, provided they are in niche spaces. They are not in commodity spaces like tyres. Tyres, I think the entire uptick has been driven by, one, the movement in autos, and two, the secular fall or the steep fall in rubber prices.
All right, Dipen, we'll leave it at that. You gave us a lot of stocks to talk about, so thank you for that, and you enjoy your weekend. We'll see you again sometimes later. That's a view coming in from HDFC Securities. They are extremely bullish on the Indian equities. They believe this could be a golden decade for us.